Welcome back to Bunnex Investment Group. In this video, we are going to talk about a powerful and accurate M&W trading strategy within the series of prop firm trading strategies. So over the next couple of videos, you'll see a lot of strategies that we'll discuss which can help you to pass proprietary firm challenge accounts. So basically, for those who do not know what prop firms are, these are actually funding companies which allow you to trade on simulated accounts, and from those simulated accounts you can keep approximately 75 to 80% of the profits that you generate. So it's actually a good thing to try since a lot of traders are actually undercapitalized. But how do we pass those kind of evaluations? You need to have some knowledge, and you need to apply real things that have been proven over time. So this series is going to focus mainly on the strategies that you can use to pass these evaluations from these prop firms. So you need to subscribe to this channel if you haven't done so that you won't miss any of the strategies that we'll be releasing, since we are going to focus some on price action, pure price action, some with indicators, some basically with fundamentals. So you'll be able to choose from a variety of a big spectrum. On that note, let's actually jump into the first episode. So we've said this one is going to utilize the M's and W's, and by M's and W's is basically a pattern whereby we just we are looking for these particular patterns within the charts flow. So how do we find the perfect or the rightful points of entry using this particular pattern? We are looking at breaking of structure to find trend. The first step that you need, if you have somewhere to write down, you need to see whether you are trending within the markets. That is the first step. You should actually be in trending mode for you to get a rightful pattern or an accurate pattern. Without a trend, you are actually risking to see the market reverse against you or take out your stop loss. So how do we get those points that we call points of trending mode? There are points whereby we have been issued with a break of structure in one unilateral direction, right? So we somehow call these impulses, or some loves to call them levels, some loves to call them box pairs. There are a lot of names, but to simplify everything, we are going to call them impulses. So whenever the market gives us an impulse, like in this particular case, first impulse that has been issued, a pullback to that impulse or a corrective structure to that impulse, we expect to see a break of structure. So basically what we need to see is basically this first pattern for us to start talking about M's and W's. So basically we need impulse, corrective structure, and then impulse, like that. After seeing this particular structure, the next thing is now to anticipate where to get into the market. And where to get into the market is the next impulse, which is subsequently the last impulse within our structures. So basically the point where we would expect to see an entry will be this particular point, so that we can actually eat up this last impulse, basically like that. So this is the first point where we look for M's and W's depending on the market context. Like in this particular case, this is a point where we will look for a W pattern on the lower time frame. We can see that we are on the H4 time frame. The next point of market entry, or the next point where we need to look for a W or an M pattern, is the last point, which some loves to call the Elliott wave, fifth wave, or market maker method, third level. So in our case, we call that the peak formation high, which is actually a point that comes after twice break of structure. We need to see twice break of structure. Like in this case, there was a break of structure, another break of structure, and on the last or at the end of that particular impulse, that is where we start to look for an M or a W depending on the market context. So we have some examples for each and every time frame. Don't worry if you're actually panicking on that side. So the first we've said is the start of the last impulse within our structure. Why the last impulse? This is to simplify for us to know where the trend is. Someone would say, let's actually get in at this particular point. This is only because the structure is clear into the upward direction. But as you go, you would see that some cases the market is actually difficult to see where it is going due to consolidations. So it's better to first see two impulses in one unilateral direction, where we've said we need to see this particular pattern for us to get a trend bias. So in this particular case, we can see the market gave us an M pattern at the end. Like in this particular case, we had, right? So the M's and W's that we'll be looking for are best if they break the high of the previous leg, whereby we can actually say there is a proof of liquidity grab. If they are equal, they are okay. But if they are not equal, whereby the first is actually higher than the second, like in this case, if we had a scenario whereby we have the first higher than the second, this is not a good pattern. The best scenario is whereby we would see the first leg and then the second leg going above slightly to the first leg so that we can see proof of liquidity grab. So basically, these are the points where we expect M's and W's. Initiation of the last impulse and at the end of the last impulse, like that. So let's have more examples so that we can fully comprehend everything that we are talking about. But before we continue, make sure you check out our free Telegram channel. I'll leave the link in the description box below, where we share free signals, free advice, as well as free setups. So in that particular case, we can see there was presentation of our pattern, whereby we can see break of structure, the move to the upside or impulse to the upside, then another impulse to the upside, like that. This is a point where we were looking for an M or a W on the lower time frame. Mind you, we are on the H4 time frame. So on the H4 time frame, we do not get these patterns clearly. We get these patterns clearly on the H1 time frame or on the M15 time frame. When we are on the M15 time frame, we do not look to get in at M's or W's that are issued at the third level or peak formation high. Why? Because the market makers can actually trick us into getting into a trend that is going against us. So this is how we determine our M's and W's when we are on the higher time frame. Like in this case, what are we expecting on this particular pair? We have seen it's still a drop, like that. So what do we need? We need to see the market give us our pattern. We need to see this pattern so that at this particular point we get an M in this particular market context and go down with it. So after this explanation, let's now go on the smaller time frames to see how we could have made money on this particular move to the downside. So I'm going directly to the M15 time frame, and we can start right away to look for the patterns that we have already talked about. So these will be accompanied by proper risk management for you to pass an FTMO or any trading challenge account. So we can see this was the highest point that is available, which was this one. We need to see a pattern for us to get into the market. We had the first impulse to the downside and then pull back, and then we had the next impulse where we saw break of market structure, like that. After this has been issued, the next thing is to now look for a pattern that is already tradable on the M15 time frame, or that is actually clear on the M15 time frame was issued, which is this M pattern. So we can see an M pattern being issued, first leg and then second leg, and then at candlestick reversal pattern, which was actually a 3 candlestick. That is where we were going to make our entry and exit at that particular point. So going further, again on the M15 time frame, we can start to look again for the pattern. Whenever we see the pattern that I've showed you, the pattern, for those who have already forgotten, we've said this is the pattern that we need to see impulse and impulse, where we have one break of structure. So from that particular pattern that we could have obtained, we can see the market actually going in this particular case, where we saw break of market structure, the market broke structure like in this case, and then they actually gave us a very long drop. So in this particular case, there was no pattern, and when there is no pattern, it means there is no trade. So basically, these are the M's and W's that you should look for. In this video, I've showed you where to look for these M's and W's and how to actually spot them. So basically, you now need to go back in history, backtest, and see where you are going to make your entries. On that note, we've come to the end of our today's video. See you in the next one, and have a blessed day.